And welcome to another episode of Financial Theory. Let's talk today about Microsoft stock. Is Microsoft a buy, hold, or sell? Let's talk about that today. So Microsoft has been down for quite a while now. I think last I checked it's $3.93, something like that per share, down from a 50-week high of $555 per share. So that's like a 29% downtrend from its peak. So at the moment, Microsoft is relatively cheap to its past historical value. So right now it's trading at 23 times trailing earnings and under 20 times forward earnings. And its PE ratio sits at roughly 30% below its 5-year historical median, near 34. So relative to the broader market, this means it's a rare discount for the tech giant. So for 2026, Microsoft's capex is around $190 billion. And that's really one of the main reasons why no one's really buying Microsoft at the moment, because of the high capex spending. Now, this is a massive 66% increase from last year. So yeah, that's a pretty massive jump. So all this AI spending is regards to the AI infrastructure, and it's a pretty massive race between Google, Amazon, Meta, and Microsoft. In 2027, they are predicting Microsoft will spend around $200 billion in capex. It's not just in 2026 that they're heavily spending on capex, but also in 2027 by the looks of it. So the current forward PE of around 22 times represents the lowest forward earnings multiple for Microsoft has traded in the last 7 to 8 years. So for context, Apple trades around 30 times forward earnings, and among the Magnificent Seven, Microsoft's valuation is significantly below average. The market has fully priced in concerns around OpenAI risks, capex spending, and fears of Azure growth slowing down. Now, in terms of the fundamentals of Microsoft's business, it remains very strong. Q3 2026 showed revenue of $82.89 billion and a net income of $31.78 billion, with an AI business now exceeding a $37 billion annual revenue run rate and Azure growth of 40%. So Microsoft is now expanding into autonomous agents and AI native enterprise devices and positioning itself for continued AI monetization. So the reason why I really like Microsoft is it owns the AI infrastructure. It has Azure, but also it owns the platform that AI agents are going to be running on. So there's pretty much very low risk of AI disruption, in my opinion, for Microsoft. They've got their hands in too many pies, so it's nearly impossible for AI to disrupt their business. The AI agents still need a platform to operate on, and Microsoft has that platform. So they've got Microsoft Azure and Microsoft Copilot and Microsoft 365. And Microsoft is going to incorporate AI agents into those products to make their products even better. And they're going to increase the prices of their subscriptions, and enterprises are still going to pay, because at the end of the day, if AI helps makes those products better and makes the companies, these enterprises, more efficient, they will say that it's actually worth us spending more because it's creating more efficiency for our company. So here's the bear case. Microsoft appears cheap on a PE at 23 times, but it trades at a 41 times free cash flow due to the surge in capex. So the capex is set to reach $190 billion in 2026, consuming up to 78% of operating cash flow and pressuring near-term earnings. Gross margin at 67.6% is the narrowest since 2022, as depreciation costs mount for the data center build out. So the cheap PE argument partially rests on earnings that are being flattered by not yet fully expensing the capex cycle. So on a free cash flow basis, it's considerably more expensive. So what this actually means is that Microsoft is spending so heavily on capex that they're having less and less free cash flow every year. And I assume this is going to continue this year and also into 2027. Personally, I expect the capex spending to slow down around about 2028 and onwards for the hyperscalers. That's my timeline, but but we'll have to wait and see what they decide to do at the end of 2027. So the main thing here is, as long as Azure keeps continuing to grow, that's the main thing, because that's one of Microsoft's biggest cash cows is Microsoft Azure. And at the moment, it is still growing. Azure has reported around 40% year-over-year revenue growth in early 2026. And that's driven primarily by enterprise AI workloads and cloud native services. So here are some key risks to monitor. The Microsoft Premium holds up as long as Azure stays above 30% growth. If Azure slows below 25%, the multiple can compress damn quickly. The other key risk here is nearly half of Microsoft's record $627 billion backlog is tied to OpenAI, and this is a dependent pre-profit customer that Microsoft itself funds. So there's a heavy concentration risk here that's worth watching. The over-reliance on OpenAI is actually seen as a massive risk for Microsoft. In the past, they used to see OpenAI as a positive thing, but now everyone's viewing it as extremely risky because without OpenAI, they lose like 50% of their income. And we haven't seen Microsoft being discounted this much for quite a long time. If you're in it for the long term, for the next 5 to 10 years, Microsoft is a massive buy at the moment, because the same argument goes for Microsoft as for Meta. Once the CapEx spending has been finished and the infrastructure of AI is set up, that's when Microsoft can focus on AI monetization. And that's where the stock is going to surge pretty heavily in the next 3 to 5 years. And that's my thesis. And that's why I am buying Microsoft and Meta at the moment, whereas everyone else is focused on the shiny objects like SpaceX, like Micron, SanDisk, AMD. So usually the best opportunities in the stock market are when no one wants the stock, and that's when the business is great but no one wants the stock. At the moment, that's Meta and Microsoft. The businesses are smashing it. They're absolutely killing it, but no one wants to buy the stock. Everyone's wanting to chase the shiny new objects like SpaceX. But here I am on the other side buying heavily into Meta and Microsoft. All right, so that's my opinion on Microsoft stock. The next 3 to 5 years, that's when Meta and Microsoft stock is going to skyrocket once the AI capex slows down. All right, so if you enjoyed this video, give this video a thumbs up, like, comment, share, and I'll catch you guys in the next video. See ya.